How's it going, guys? Welcome back to the channel. If you don't know who I am, my name is Aaron. I do investing in stock market videos. I've been investing in the stock market for about 4 years now. Today's video is going to be on how I was able to achieve a 25% return in just the month of December. Now, I'm not going to lie to you. If you invested your money at all in 2019 in the stock market, you probably made a lot of money. It was pretty hard to lose any money at all. If we take a look at my Td Ameritrade account for the span of 1 month beginning December 1st, 2019, my beginning balance was $25,244. And then if we look at the ending balance for the month of December, which was $31,435, and this equates to a $6,191 gain, or around a 25% return for the month of December alone. To put that in comparison, if you just put your money into a standard ETF that tracks the market, you would have only made around a 3% return in December on your money. That just goes to show how much of a difference investing in individual stocks can really make. So you might be asking how I was able to get that 25% return, and the answer to that is a lot easier than you might think. The execution is the hard part. What you have to do, and what I did, is to invest in stocks that are showing weakness in the short term. 4 of the stocks that I am invested in as of today, January 14th, have been weak performing stocks over the past couple months before December 2019. Leading up to December, these stocks had lost me around $1,000. However, considering that I believed in these stocks for the longer term, I was willing to take a short-term loss on them in order to average down my position to get a lower cost average. The main reason this works is because I had actually done the research on the companies and came to the conclusion that they were undervalued. And also the fact that when the companies have a lot of negative news surrounding them, they tend to keep trending down until the negative news starts to subside, and that's when a lot of times you can start to see the bottom. However, where the problem comes in and where it's difficult to execute is there's a lot of times some people who just follow what other people are doing. You have to actually do your own research and have confidence in the stock that you are buying and not follow someone else just because they're doing it. It could end up in you selling because you never had the confidence in the stock to begin with. So all you see is you are losing money, and in the end you will end up selling out because you get scared, and maybe after you sell, you watch the stock rebound 50% within the next couple of months. iRobot, for example, is one stock that I own and one that I have been buying since it hit $47 per share. Now, this was a stock that just 6 months ago was $93 per share. But just with all the weakness and negative news surrounding it, in the last couple of months, it brought it down 50%. The stock's lows were on November 29th, which had the stock end at $43.56 a share, which my cost average at the time was 100 shares at $45.21 per share. Now, from November 29th's close to December 26th, the stock made almost a $10 move, which equates to almost a 20% return from the lows in just under 1 month. Another one of the stocks that I own that has given me a pretty good return within the last couple of months was Wynn Resorts. Wynn Resorts is a stock that within the last couple of years has ran into some issues, such as the owner, Steve Wynn, being a part of a sexual scandal that ended up hurting the company and the stock in early 2018 all the way into late 2018. The fact that the markets had a lot of negative sentiment didn't help at the time, and along with the fact that Steve Wynn, the man who made Wynn Resorts what it was going to be out of the picture, they had to get new management, and they just had a rough time trying to get investors to invest at the time because of that rocky transition that was taking place, which in the end caused the stock to drop as low as $93 per share by December 21st. However, as of recording this video, since then, Wynn Resorts has come back more than 50% from the lows, up to $147.21 per share. However, I do want to say, just because I invested in more speculative stocks this year does not mean that that's all I own. I do own stable companies as well, like Facebook and Microsoft. Those both, just in December, probably made me around $1,500. And that's actually pretty good considering the fact that they're really stable companies and they don't usually produce that much. So today's video was a little bit short, but in summary, basically what you want to do is invest in companies that are a little bit more speculative, but also have stable companies there just in case those speculative companies lose you a lot of money in the short term. From there, what your goal is to keep getting down your cost average, but do not put all of your money in that speculative stock at one given time. Slowly and surely, keep getting your cost average down until that stock hits a bottom and then starts to bounce into a positive trend. This is 100% how you make the most money in the stock market, and please, please, please make sure not to follow other people. You can follow what they're doing as long as you actually put forth the time and effort in order to look and research companies and see how they're actually doing and how they plan to perform for the future. So guys, that does it for this video. Make sure to like the video if you did. Comment down below whether or not you think this is a good idea and whether or not you are going to actually implement this into your strategy of investing. And always make sure to subscribe. That does it for me. I'll see you later.